Femi Ogundimu is a fixed income trader at Access Bank. He joins me to discuss this conversation. Femi, glad to have you join us for this conversation on Power Lunch West Africa. Let's start first. It's the last day of trading for the week. What's your assessment of activities within the space so far?
Good afternoon, Christy. Thank you for having me. Today has been rather quiet in the fixed income space. This is despite the fact that the market is relatively quick, so you would expect that there should be some bullish sentiment where players are buying in the market. But what we've seen, this week overall, from the beginning of this week up until now, it's a very quiet market. On the treasury arm, we've seen little or no activity. The few activities we've seen small, a little bit of time for the mid to long term treasuries, but because the levels are kind of low, they are 3% levels. It's been, investors are kind of reluctant to buy at that level. And the bond market, it's also been very quiet. Yields are actually trending higher than what they expect. On Wednesday there was an auction where we saw the long term being offered at 9.9 or being sold at 9.9%. At the moment, it's being offered at 9.97 to 10% levels, which means that market is a bit bearish. But there hasn't been so much demand in the real sense of off-takers of such maturities. So overall, market has been rather quiet, just been seeing calls in the market, and no continued trade so far.
Quiet market all the way. But how did the market respond to the FAAC allocations that came in yesterday?
Okay, the FAAC allocation came in quite late yesterday. It was not much after market that came in, and so it, of course, it put a bit of liquidity in the market. However, today there's the bond auction debit of about 126 billion. So that should moderate the impact of the FAAC inflow in the market currently. But nevertheless, the rates at the interbank should still be slightly high, slightly low, because overall we have net credit in the market, and so the FAAC inflow also hasn't really created much activity in the bond space. Like to expect that there should be demand or bullish sentiment given the level of liquidity in the system, but we're not seeing that. We're actually faster than that. We're actually seeing more offers to the market as against demand.
Speaking of scarce system liquidity, especially at the FX window, how did the I&E window respond to this?
The FX market has been, rather slow as well. Officially, the rates are 3 to 1. The NAFEX rate is about 335.63 thereabout. The I&E window, where you see most of the activities, is also being rather slow because the demand, there's paucity of funds in that market industry. So we've seen little inflow that could trigger activity in the market. What we have is lots of demand and no inflow to meet such demand. So the market has also relatively been quiet, and hoping that more inflows will cause more activity in the market. So overall, what we have is more demand, less supply, and rates depreciating to about 3 to 6 currently. And that was yesterday. Today is about the same thing. And so that's pretty much what happened in the FX market.
Femi, just before we wrap the conversation, I see you speak of selling interest in the bond space of the 2026, 2035 and 2049 maturities in a currently a low yield environment. Who's buying?
One of the impacts of a bearish sentiment in the market is that yields can trend higher. So what we saw offers on those maturities, this is because the first you mentioned, that's 2026 and 2035, they are bonds are being reopened at the auction. So we have players that won this at the auction and they really want to sell off, which is why they've been offering it. 2049, the demand on that bond always been there. And so, but looking at overall, based on the low yield in the market, investors need to put their funds somewhere. So even though yields are low, and you have funds, you need to actually put it invest somewhere. So that's the expectation that at the end of the day, investors will have to put their funds in any type of instrument. So what we are seeing, like I said, are more of bearish sentiment. We've seen offers of this in the market, people that won at the auction trying to offer it in the market to sell. for 2020 and 2035. Also 2050 as well too. I mean, we've seen offers in those ones to, trying to sell. The stock rate at auction, like I said earlier, was 9.9%, and currently it's being offered between 9.9 and 9.95 as well. So you can see that the market aggressively wants to sell what they have, but the demand is not there currently. We feel that this demand might come in the coming week, however, as we expect an influence into the market in the coming week.